For most people, buying a car is the second largest purchase they will make after buying their home. As a consequence, it is quite normal for the purchase to involve some level of finance. There are quite a number of different finance options available, such as personal contract purchase or personal contract hire or hire purchase, but nearly all will involve some level of interest being paid on the amount borrowed. There are strict regulatory rules in place surrounding the charging of interest, and some finance lenders have breached those rules. So in this video, I'll explain what the rules were, how some firms broke them, and in what circumstances you might be able to claim compensation for the interest rate on your car loan being unfairly high. So let's start at the beginning with what exactly have some firms done wrong. So when you buy a car from a dealership, it will likely offer you some finance options. That finance is provided by a number of different lenders, some very well known like Barclays, Black Horse, Santander, and some not so well known. The lenders pay the car dealer a commission for selling their particular loan, so as you can imagine, it's a very competitive market. In order to push themselves to the front of the pack, some finance lenders allowed car dealerships to increase the rate of interest on the car loan in return for earning a higher rate of commission. These became known as Discretionary Commission Arrangements, or DCA for short. The Financial Conduct Authority, which is the finance industry regulator, found out about this practice and duly banned it in January 2021 as being very unfair to consumers and thus a breach of regulatory rules. But before the ban, it is estimated about 40% of car finance lending involved a DCA. In other words, the car buyer paid more interest than would have been the case had the lender's standard interest rate been used, which obviously led to the car dealership receiving more commission and the lender receiving more interest on the loan and thus a higher profit margin. It was a totally unfair practice as consumers were not told that a sweetheart deal between car seller and lender would mean they had to pay more for the car. With an estimated 90% of car purchases involving some form of finance, it's not hard to see that consumers have potentially lost out to the tune of billions of pounds. So will you have been affected? Well, if you took out a car loan between 6th of April 2007 and 28th of January 2021, there's a 40% chance your loan was of the discretionary commission arrangement type. This means you will almost certainly have paid more interest on your loan than you should have done, perhaps thousands of pounds more, depending upon the value of the car. However, it's very difficult to tell from the loan paperwork if your loan was the DCA type. Instead, it is necessary to investigate this with the lender in each case. So what type of loans were potentially of the DCA type? If you bought your car through a personal contract purchase agreement or hire purchase agreement, it could have been on DCA terms. Personal contract purchase, or PCP for short, loans vary a little in structure, but basically you make a down payment to secure the car, then you pay monthly over 36 or 48 months, and at the end of the agreement there will be a final lump sum to pay to buy the car, if you want to do that. If not, you simply hand the car back and either walk away or use the trade-in value as a deposit for another car on another PCP deal. Hire purchase, or HP, is a little different. Here the full cost of the purchase is split into monthly repayments over a fixed term, again usually 36 or 48 months. At the end of the term, the car is yours. So if you bought your car with a PCP or HP agreement, it is definitely worth finding out if it was on DCA terms. What finance arrangements are not of concern? Well, if you bought the car on a lease, also known as personal contract hire, then this is not within the scope of the mis-selling issue. Also, if your loan had a 0% interest rate, i.e. you paid no interest at all but just paid back the amount borrowed, then it won't have been on DCA terms. And do note that you won't be able to claim mis-selling if the loan was to buy a car primarily for business use, but you can claim if the loan was provided to a business to buy a car that would be used primarily for personal use, and the loan was under £25,000. So what if you no longer have the car and or the loan? It doesn't matter. If the loan has already been paid off or for whatever reason, i.e. you reach the end of the term or sold the car, you can still claim. You may have been the victim of mis-selling, and you can go back for as many years as necessary, up to 2007, to claim, as you may have paid thousands of pounds in extra interest on that loan. But what if you no longer have any paperwork for the loan? This can be recovered from the lender using the right to access provisions within the Data Protection Act 2018. However, if the loan was repaid more than 6 years ago, you may not be able to recover a copy from the lender anymore. They are only required to keep paperwork for 6 years after an agreement ends. But do check with your lender anyway, as many do keep documentation for much longer periods than the minimum set out in law. If you cannot remember which lender gave you the loan, order a copy of your credit report from Experian or Equifax. If the loan was active within the last 6 years, the lender's name should be recorded on your report. Or try going through old bank statements to find the name of the firm taking your direct debit payment each month. Now, what if the finance lender and/or car dealer is no longer in business? Well, it makes no difference if the car dealer is no longer trading. The loan terms were the responsibility of the lender, and they will be responsible for any mis-selling. If the lender itself has gone out of business, unfortunately, it's unlikely you will be able to claim any money back. I hope you found this video helpful and informative. If you think you were a victim of mis-selling or just have some further questions about car finance mis-selling, you can find out how to contact me at www.pension-claims.com. Many thanks for watching.